Wow, that's bad. That's really bad. Whew. Ouch, that's nasty. Okay, I get it. I wasn't the best test taker in school. I may have got some A's, some B's, some C's, and there was that D. But that was pre-calculus, y'all, and that was super hard. Now, luckily, I majored in finance, so I finally learned a thing or two about money, but it was still a challenge. I had student loan debt, I had credit card debt. I didn't understand the basics of investing until really after I graduated. And I know I wasn't the only one that was struggling with money, and there are people still struggling with money today. You see people with record high debt. We see those that have little to no savings in their bank accounts. Those that have never invested for the first time. So it's probably not a surprise whenever I share about this investing quiz that I found online where the average American scored an F. Yes, they did this bad. So the thing is about this quiz was that it really wasn't that hard, at least for me. And trust me, that's not saying a lot, because sometimes I can be kind of dumb. So do you think that you could pass this quiz? Well, I'm gonna share what the 10 questions are and the answers with you right now. What's going on, y'all? Welcome back to the channel, Wealth Hacker Labs. I am your gracious host, Jeff Rose, and we've got this quiz that I want you to take a look at. As I mentioned, I wasn't the best at school. Like I was okay, but I was able to learn by reading books, by being mentored. Yeah, majoring in finance helped, but believe it or not, it was actually talking to other people that were smarter than me, which there was a lot that were smarter than me with investing, with personal finance. Like that's where I truly learned. But let's go ahead and hop on over to the computer and find out what this quiz is that I'm talking about. So I came across this quiz in my news feed today, and I found this quiz on CNBC. Here it is. So as you can see, here's the headline. The average American scored an F on this investing quiz. See how you do. So I had to see how I did. I took the quiz. I mean, not to boast, but I did score 10 out of 10. I assumed that I should do that considering that I was a financial planner for 16 years. I'm still a certified financial planner. I majored in finance. Like if I better score 10 out of 10, otherwise I have no business doing a personal finance YouTube channel. So I'm not gonna give myself like a ribbon or any sort of prize or a trophy, but I still had to take the quiz to see how I did. So where did this quiz came from? So this was a survey that was done on the site Magnify Money, and they quizzed over 1,025 American adults. And this was anywhere from Gen Z on up to, I'm assuming, baby boomers. Actually, I didn't find the actual age group of this, but it did say it was adult. And even still, like we had this large age group, still everybody, the average American only scored under 40%. Now the lowest of this were actually the millennials. They said millennials and Gen Z averaging scores under 40%, which I'm being honest, I actually was surprised with that. I guess I should assume that younger people don't have the experience, but I just assumed, well, yeah, Robinhood, everybody opened up their apps and buying Tesla stock and everything else. I just assumed that maybe they would have more understanding, or at least an equal understanding. Because trust me, I've met plenty of baby boomers that couldn't answer a lot of these quizzes. So I thought it would be pretty even keel. All right, enough jibber jabber. Let's go ahead and find out what this quiz is. So on to question one. Question one is, which best describes your understanding of compound interest? Now, surprisingly enough, only 30% got this question right. But the interesting about this is like, let's look at the answers here. So question one, which best describes your understanding of compound interest? I know what compound interest is, and I know how it's calculated. I know what compound interest is, but I'm not sure how it's calculated. I do not know what compound interest is. Like those are the three options. And surprisingly, only 30% got this right. So I guess I want to give credit that people weren't like just trying to make up an answer and just say that they knew what it was. But my goodness, like compounding interest, like this is the tell-all be-all of how you build wealth, how you make money. And if you don't know what this is, I guess I need to do another YouTube video talking about compound interest. Nonetheless, what was the answer? Well, I mean, for me, yes, Do I know what it is? I sure do. Do I know how it's calculated? Yes, I do. Boom, there it is. And in case you don't know, here is the answer. And I won't bore you to tears with actually reading the answer. You can go take this quiz, answer yourself to find out. But that was question number 1. So let's find out what is question number 2. Once again, I think pretty simple, but it might be hard for you. Let's find out. Number 2 is, what is the S&P 500? And the answers are an online news blog for investors, a list of the 500 most profitable companies in the world, or an index that tracks the stocks of the 500 large US companies. So that's, once again, the S&P 500. I get how the last two, that might be a bit confusing. You know, a list of the 500 most profitable companies, that sounds pretty legit. I hope you know it's not a news blog. Maybe you do. Well, if you did think that, you're going to know now. So what is the right answer? Tell them what the answer is. All right, so it is an index that tracks the stocks of the 500 large US companies. That is the S&P 500. Moving on to number 3. This is a true or false question. Should be fairly simple. Let's find out. True or false? When you purchase a stock, that means you are a partial owner of the company. What do you think it is? When you buy stock, are you a partial owner of the company? Does that mean that you have to clock in and clock out? Do you have to manage payroll, keep track of your employees? No. But are you a partial owner? The answer is yes. True, that is correct. Stocks are shares of ownership in a publicly traded company. See, I told you, that one, pretty simple, right? That's number 3. Let's go on to number 4. This is another big one, especially if you are investing. Compounding interest with a dividend is huge. What is a dividend? The rate at which interest compounds, money paid by a company to its shareholders, or the difference between what you bought an investment for and what you sell it for. Which one is a dividend? Do you know the answer? I hope you do. If you don't, here's what it is. Money paid by a company to its shareholders. I don't know if this one comes up later on. I think it does. So yeah, okay. I was going to say more about a dividend, but there's another question that we'll get to that answers that question. So that is question number 4. What is a dividend? Dividends are huge. If you are investing in the stocks, typically you can buy your growth stocks like your Teslas, your Facebooks, but also you got your blue chips that pay dividends, and dividends are it's just cash. It's cash in the bank. It's money in the bank. You see it. I know you see it. It's back there. Dividends are money in the bank. All right, going on to number 5. Number 5 is, how is a company's share price determined? Is it by the Federal Reserve, supply and demand in the market, the company's board of directors, or the New York Stock Exchange? How is a company's share price determined? I could see how this one would be a little difficult. I mean, there's some good answers there. The Federal Reserve feels like the government's in charge of everything. Maybe, they're the ones setting the price on this, but they're not. The answer is supply and demand in the market. The market's like any other market. The more demand there is for a good company that's making a good product that has solid earnings, it's going to drive the stock price up. That's one of the reasons why you see Facebook and Tesla right now. Amazon hitting an all-time high today. That is supply and demand. More people want it because they just keep pushing the envelope, keep making money, and the demand is there, so hence supply it goes down, price goes up. That's just standard economics. All right, that was number 5. Moving on to number 6. Number 6 is, what is the Dow Jones? An index tracking the stocks of the 30 large US companies, a marketplace where investors can buy and sell stocks, or an investing related podcast. I think if it was a podcast, they may have a trademark issue, so I wouldn't do that. So knowing that, it's going to be 1 or 2. What is the answer? The answer is an index tracking the stocks of the 30 large US companies. And it's funny because when people often refer to the market, although they are typically talking about the Dow Jones, as you've now learned, the Dow Jones only represents the 30 large US companies, whereas the S&P 500 is the top 500, the largest 500 US company. But it's kind of like asking, what's the weather today? The index that most everybody refers to is the Dow Jones. A little more information there for you in case you were wondering. All right, moving on to number 7. We got another true or false. Number 7 is novice investors should focus on timing the market to maximize their investments. Novice investors should focus on timing the market to maximize their investments. Can you time the market? Many think they can, and many can execute that, but typically no. Novice investors should focus, they should not focus on investing, because you're typically, if you are new to the market, you're new to investing, you're not going to know when the right time is to get in or to get out. Typically emotions get in the way because either you want to make more or you don't want to lose, so you're going to hang on. That's a whole other video I could do. False. The answer is false. Moving on to number 8. What does it mean when a stock has a high PE ratio? When a stock has a high PE ratio, in case you're curious, this has nothing to do with how physically fit they are, how many push-ups they can do, how many pull-ups they can do, how fast they can run the mile. We're not talking about gym class here. So what is the answer? What does it mean when a stock has a high PE ratio? That means that the stock is expected to increase in value. So they have a high price to earnings ratio. We can get into that in another video, but that's what number 8 is. All right, going on to number 9. Number 9 is, and this was more of a tax one. I could definitely see how one could miss this one. So number 9 is, how long do you have to hold a stock for it to be considered a long-term investment for tax purposes? So you have either a long-term capital gain or a short-term capital gain. And the answer is to this question is, how long do you have to hold a stock for it to be considered a long-term investment? It is 1 year. You have to hold it at least for 1 year. If you sell any shorter than that, well, that means you have to pay short-term capital gains, which is taxed at your ordinary tax rate. So whatever tax bracket you are in, that's how much taxes you have to pay. So somebody in a higher tax bracket, say that you are in the 30% tax bracket and you sell it in less than a year, you got to pay 30% tax. And that's not a lot of fun. Yeah, you're making money, that's the good thing. But if you held it for a year, then you would be subject to a 15 or potentially 20% tax rate, depending on what tax bracket you are in. So you could save significant amount of tax. That's a whole other video in itself, but now you know if you want a long-term capital gain, you better hold that puppy for at least a year. All right, here is the last question. We're going back to dividends. Another important question. Do all stocks pay dividends to investors? Do all stocks pay dividends to investors? And the answer is no. Not all stocks pay dividends. Does that mean that you shouldn't buy the stock? Absolutely not. As I mentioned earlier, Facebook, Tesla, these are some companies that are making people a lot of money, and these stocks currently do not pay a dividend because they are all about reinvesting back in the company, investing for growth. So how did you do? Did you score better than the 3 or 4 out of 10 that the average American scored? If you didn't, hopefully you learned something today. And this is the one thing, this is one of the big things I talk about here on the Wealth Hacker channel, is that the only way that you gain wealth, I mean, wealth is not just what you have in your bank account or what you have in your briefcase. Wealth is also what you have up here. Information, knowledge, experience, all these can equal wealth. So if you learned something today, if you were able to answer a question correctly just by watching this video, well, check it. Maybe your bank account didn't increase, but you just increased your personal net worth. You just gained a little bit of wealth, and that is huge. Now, the key is, how are you going to apply it? Have you learned something today that you can now apply to your own investing, financial planning, wealth building journey? If so, let me know what that step is and what you're going to do. Let me know in the comments below. If you haven't yet, please subscribe. And also, if you did learn something, give this video a thumbs up, share it with somebody that needs to know some of the basics when it comes to managing money, investing, because guess what? We all need to get wealthy. All right, y'all, this is Jeff Rose reminding you that it's your money, it's your life, and only you can make it awesome. Until next time, peace.